The Fed just did the unthinkable, and almost nobody is talking about it the right way. For the first time in its entire history, the Federal Reserve opened up its emergency dollar window, the one built to bail out American banks, and handed the keys to a foreign government. Japan can now walk up, drop off a stack of US Treasuries, and walk out with fresh American cash. No selling, no crashing the bond market, no mess. And the Treasury Secretary didn't just allow it, he said he wants to make it bigger. I've built companies from nothing. I've lost money. I've made a lot of money. And I'm telling you, when the plumbing of the entire global financial system changes overnight and almost nobody notices, that's not a small story. That's the story of the year. So stick with me, because by the end of this, I'm going to show you exactly why this matters to your bank account, not just the bond market, and why the next few months are going to reward the people who understand this and punish the people who don't. Before I get into it, I need you to do one thing for me. Hit subscribe right now. I'm not saying that because I need the number to go up. I'm saying it because what I'm about to explain to you is worth more than most of what you'd pay a financial advisor for in a year. And I'm giving it to you for free. All I'm asking in return is you stick around for the whole thing. Subscribe, and let's get into it. So let's start with what actually happened, because I want you to understand this. The way I'd explain it, if we were sitting across the table and you had zero background in finance, that's how I like things explained to me too, by the way. If somebody can't explain something simply, half the time it's because they don't actually understand it themselves. So here's the simple version. The Fed has something called a repo facility. Think of it like a pawn shop, except the customers walking in the door are entire countries instead of people with a guitar and a watch, a foreign central bank. Let's use Japan since they're the one everybody's talking about right now. Walks up with a pile of US government debt, treasuries. They hand that over as collateral. The Fed hands back real dollars. A day or two later, Japan pays it back, gets their treasuries returned, and the Fed keeps a small fee for the trouble. That's it. That's the entire trick. Stripped of all the jargon. Now here's why that actually matters and why you should care. Japan has been spending enormous amounts of money defending its own currency, the yen, because the yen has been getting hammered. Where does that defense money usually come from? They sell us treasuries to raise cash fast. Sounds simple enough, right? Except here's the problem. When a country as massive as Japan starts dumping US government debt on the open market to raise cash, it pushes American interest rates up. And America's already sitting on roughly $40 trillion in debt. At that size, every little tick upward in interest rates costs the country real money, billions of dollars in extra interest payments. So instead of dumping bonds on the open market and rattling the entire US bond market, Japan can now just pledge those bonds, instead get the dollars they need, defend their currency, hand the bonds back later quietly, with nobody outside, a few trading desks even noticing it happen, no forced selling, no spike in rates, no mess spilling over into markets that have nothing to do with Japan. I want you to really sit with why this is a genuinely new move, because on the surface, it sounds like a boring technical detail, and it is anything but that. This facility technically existed since the pandemic, built in March of 2020 as an emergency tool, and it had strict limits, something like $60 billion per foreign bank. That is not a footnote buried on page 9 of some Treasury filing. That is the United States building a permanent pressure release valve directly into the global financial system on purpose, out in the open, for anyone paying attention to see. When I was building my first companies, before any of this Shark Tank stuff, I learned pretty fast that the businesses that survive long-term are the ones that build in slack and safety margins before they desperately need them, not scrambling to build them after the crisis has already hit. That is exactly what's happening here, except at the scale of an entire global economy instead of one company's balance. Let me put a number on that for a second, because vague statements like "it matters a lot" don't actually help you. Japan is the single largest foreign holder of US government debt on the planet, holding well over $1 trillion worth. When a holder that size threatens to sell even a fraction of that pile to raise cash fast, that's not a rounding error. That's the kind of selling pressure that can move interest rates for every single American with a mortgage, a car loan, or a credit card balance. So this isn't some abstract story happening between two governments on the other side of the world that has nothing to do with you. It's directly connected to the interest rate you pay on your own debt and the interest rate the government pays on its debt, which eventually gets passed right back down to you through taxes, inflation, or both. Now, here's the part that should make you sit up straight and actually pay attention. This isn't charity. The Fed isn't doing Japan some kind of favor out of the goodness of its heart, because that's not how any of this works ever. They're getting the safest collateral on the entire planet. In return, us treasuries, they take on basically zero credit risk because the US government isn't defaulting. Zero currency risk, since they literally print the dollar themselves, and they charge a fee on top of the whole arrangement for their trouble. So it's a genuinely good trade for the Fed. It's a good trade for Japan too, because it removes the chaos that used to come from a forced fire sale of bonds. Everybody sitting at that particular table wins, except for one specific group of people. The traders who were betting against the yen, expecting exactly that kind of chaos and disorder to make them money. That trade just got a whole lot harder to pull off. And that tells you something genuinely important about how the world works right now when a system stops rewarding chaos and starts rewarding cooperation between central banks. The people who don't adjust their thinking get left holding the bag while everyone else moves on. Here's why I keep using the word reset in the title. And I promise you, I don't throw a word like that around just to get clicks. I've got better things to do with my time. For decades, the entire global financial system ran on one simple, almost unspoken assumption. If a country needs dollars in a hurry, it sells US debt to get them. And that selling is exactly what causes rate spikes and market stress to ripple out everywhere else. That's been the playbook my entire career in business and investing. What just happened is the Fed quietly built an alternative pipe running parallel to that old system, a way for foreign governments to get the dollars they need without triggering that whole chain reaction of selling and stress. That is a structural change in how the actual plumbing works underneath the surface, not some one-time policy tweak that gets forgotten in a month. And when you change the plumbing of the system that the entire world runs its money through every single day, you change where money ends up flowing. You change who wins and who loses in that flow, and you change how fast the next crisis actually spreads through the system, or whether it spreads at all. If you think this is the first time you've seen this particular movie play out, you're wrong. And honestly, this is where it gets really interesting for anyone who's been paying attention over the years. Rewind with me to March of 2023. Credit Suisse, one of the largest, oldest banks on the entire planet, is collapsing in real time. The Swiss government is scrambling behind closed doors, trying to figure out how to stop it. And that same weekend, the Federal Reserve, along with the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, and the Swiss National Bank, all put out a joint statement about coordinating dollar liquidity. Together. Sounds incredibly boring written out like that on paper. It was anything but boring in practice. That same weekend, Credit Suisse got forced into a shotgun marriage with UBS to prevent total collapse. And the US quietly sent billions of dollars flowing in that direction to stop the bleeding before it spread any further. The tool they used back then was called swap lines. Different name than what we're talking about today. Same underlying idea, same underlying purpose. Get emergency dollars to a foreign financial system before it cracks and takes the rest of the world down with it. So here's the actual pattern I want you to learn and remember, because this is exactly the kind of thing that separates people who build real, lasting wealth from people who get wiped out at the worst possible moment. When something starts breaking behind the scenes in a foreign financial system, and the Fed suddenly opens up a new dollar channel on an emergency footing, that is a signal. Plain and simple. It means somewhere out of public view, something is under real, genuine stress, and the people running the global system are actively trying to contain it before it becomes contagious and spreads to everyone else. In 2023, it was a European bank sitting right on the edge of total collapse. In 2026, it's a currency intervention that vaporized roughly $1 trillion of carry trade positions in about 40 minutes on a single Friday afternoon, different triggers each time, same underlying signal both times. And that's the thing about patterns like this. They don't repeat because someone's running a secret playbook behind closed doors, and they repeat because the underlying incentives never actually change. Central banks want stability, they want to avoid contagion, and they will reach for whatever tool is sitting closest to hand to get that outcome, whether it's called swap lines, repo facilities, or something with a brand new name 5 years from now that we haven't even heard of yet. The professionals, the hedge funds, the institutional trading desks, they've watched this exact movie play out enough times now that they instantly know what it means the second that headline hits their screens. Most regular everyday investors simply don't have that context yet. And that gap in understanding is precisely where regular people get hurt, the absolute worst. Now let's talk about what all of this actually means for you and your money. Because history lessons are genuinely interesting. But I care a whole lot more about what you actually do with your money, starting today. Right now, this week, here's the single most important thing I'm going to tell you in this entire video. So don't skip ahead every single time a central bank opens a brand new pipe to pump more dollars into the system. One thing reliably, predictably happens. Asset prices go up over time. Not because businesses are suddenly worth dramatically more overnight, and not because the underlying economy magically got better while you were sleeping, but simply because there are more dollars chasing the exact same amount of stuff in the world, and that means the flip side of that coin is also true. Cash quietly loses real value the longer you sit there holding on to its. Think about the price of a house or a car or even just groceries. 10 years ago versus today, nobody woke up one morning and decided a loaf of bread was suddenly worth more. What happened is the number of dollars in the system kept growing faster than the number of loaves of bread. And every time that happens, the dollars you're holding buy a little less than they did before. That's not a theory. That's just arithmetic playing out in slow motion. And it's exactly what tends to accelerate whenever the Fed builds a new pipe to pump more liquidity into the system. I've said this for years to anyone who'll listen. Sitting entirely in cash feels safe. It feels responsible. It feels like a smart, cautious move. But in a world where the plumbing just got rewired specifically to pump more liquidity into the system every single time, cracks start showing up. Cash is the thing quietly melting away in your hand while you sit there, convinced you're playing it safe. I built every one of my businesses on one simple, non-negotiable rule. Know exactly what game you're actually playing. Because if you don't fully understand that, somebody else out there is playing that same game against you and using you as their exit when the trade is done. That's precisely what happens to regular investors in moments exactly like this one. The professionals read a signal like this new facility opening up. They immediately understand what it means for liquidity and risk appetite across the whole system. And they position themselves ahead of the crowd quietly before anyone else catches on. Then everyday people pile in late, right around the exact moment the smart money is already looking for someone new to sell to. And that's not some wild conspiracy theory. That's simply how markets have functioned for over 100 years. And pretending otherwise doesn't protect you from it one bit. It just leaves you exposed. Think about it this way for a second. If you own a company and you found out one of your biggest competitors was quietly restructuring their entire supply chain, you wouldn't just shrug and ignore it. You'd want to know why. And you'd want to know what it means for your own business before your competitor gets a head start on you. The Fed opening this facility is the exact same kind of signal, except it's happening at the level of the entire global economy instead of one industry. It's telling you something changed in how the biggest players in the world are managing risk. You don't have to be a bond trader to understand that. You just have to be paying attention, and most people simply aren't, because most people treat the Fed like background noise instead of the single most important player in the entire financial system. So what do you actually do with all this information? Let me be really specific here, instead of just staying vague, because vague advice is useless to you. First, you stop treating cash like it's a real strategy on its own. Cash is a tool you use for flexibility and optionality. It is not a place where you park your entire future and just hope things work out fine. Second, you start paying close attention to where money is actually moving in real time, not just to whatever headline is screaming the loudest that particular day. When the Fed builds a brand new pipe for dollars like this one, that liquidity has to land somewhere eventually, and historically it lands in productive real assets, actual businesses with actual cash flow, real ownership stakes in things people will genuinely still need 5 and 10 years from now. That's always been my personal approach, whether it was building companies from absolutely nothing in the early days or buying into established public businesses later in life. I want to own something real and tangible, not a piece of paper that only holds value because everybody happens to agree it does on any given Tuesday. And I want to be completely straight with you here because I think you deserve that. I am not a financial advisor. I'm not registered to give you personalized financial advice. And frankly, anybody on the internet telling you exactly what to buy without knowing the first thing about your specific situation, your goals, your risk tolerance, is usually selling you something. And more often than not, that something is themselves. And what I'm telling you as clearly as I possibly can is how to think about a moment exactly like this one. When central banks start building emergency plumbing out in the open, in public, that is not the moment to freeze up completely and do absolutely nothing. And it is definitely not the moment to panic either. It's the moment to get educated quickly about how money actually moves through the system, because that particular kind of knowledge compounds for you for the rest of your entire life. And it means you finally stop being dependent on the next guy with a microphone telling you exactly what to do with your hard-earned money. I didn't get to where I am today by sitting around waiting for someone else to hand me the answer on a silver platter. I got here by actually learning the mechanics well enough to make my own calls with confidence. And that is genuinely the single biggest thing I want you to walk away from this video with today. I've watched a lot of people over the years make the exact same mistake, and it's not picking the wrong stock, and it's not getting unlucky with timing. It's quitting entirely. Something happens that they don't understand, they get scared, they pull everything out, and they never come back in. And that single decision costs them more over a lifetime than any bad investment ever could. And that's the actual danger hiding inside a story like this one. Not that the Fed opened a new facility for Japan, but that people who don't understand what it means will either freeze up completely or worse, panic and make a decision out of fear instead of out of understanding. I've made plenty of bad calls in my career, plenty of them, but I never once quit the game entirely because I didn't understand a headline. That's the difference that actually matters long term, and it's the difference I want for you. Here's my challenge to you, and I mean every word of this. Don't just watch this video, nod along, and move straight on to the next piece of content like it was just another form of entertainment to pass the time. Go actually look at what happened this week for yourself. Read the primary source material, not just somebody's summary of a headline, and ask yourself one genuinely honest question. Am I someone who actually understands how money moves through the system? Or am I someone who only finds out what happened after everyone else has already made their move and taken the profits? If the honest answer to that question bothers you even a little bit, good. That means you're actually paying attention now. And that's exactly where real change starts. Spend the next week genuinely learning the mechanics behind moments like this one instead of just reacting emotionally to the noise and the headlines. Subscribe right now if you haven't already, because I'm going to keep breaking moments exactly like this down the second they actually happen. Not weeks later once it's already stale, old news that everybody's already traded on. Drop a comment below and tell me honestly what confused you the most in this video, because I genuinely read every single one. and I'll cover the best questions from you in the next video. Share this with one person in your life who genuinely needs to understand this properly, instead of just feeling vaguely anxious about the news without knowing why. Nobody in the history of the world ever built real, lasting wealth by staying scared and the uninformed at the exact same time. Get informed, learn to make your own calls with confidence, and I will see you in the very next one.